Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema and Hormuz. Good morning, guys. Well, after that stellar rally yesterday, the markets are quiet, but not so quiet as well. We have seen a gain of 50 points on the Nifty as well, managing to be above that 24,900 mark. Bank Nifty has seen a recovery. So off the day's low, around 140 points on the Bank Nifty itself, and that is something which is supporting the Nifty as well. In terms of movers, we have individual names. The auto pack continues to do well after that 4.5% uptick that we saw yesterday as well. The small cap index up 0.5%, and that is one which is outperforming majority of the indices as well. We do have the PSU banking names which are supporting the moves that we are seeing on the Bank Nifty as well. But all in all, it's very sector specific and very stock specific as well. Though earnings are done with, we still have a lot of news flow to talk about.
Yeah, auto stocks right on top. So Tata Motors is your top gainer right now, up nearly 4%. Bajaj Auto, Hero MotoCorp racing ahead with a 2% gain. And then the other big mover is Reliance Industries. And today it's above that 1,400 mark on Reliance Industries. Sectorally, I think the two sectors where things are a bit subdued include the defense and broadly the CPSE index. The Nifty CPSE index is in the red and the defense index too is down close to about 0.5%. But let's tell you what we have for you in the next 1 hour on Trading Hour. First up, we speak to the management of Blue Star on the impact of the likely GST cut for consumer durables. Mukesh Shindal from Alpha Capital will be joining in to decode the latest trends from the space of crypto. Later, Devang Mehta of Spark Private Wealth Management will join in to discuss his take on the markets.
Okay, all right. So that's what we have lined up on the show for you today. But before we go to Hormuz for some of the buzzing stocks that we'll be talking about, some stocks which are otherwise buzzing as well. HPCL, for instance, is up 3%. There's a note today coming in from one of the brokerages which talks about how Russian crude imports continue to be a strategy for all these oil marketing companies. Now, do remember, HPCL has the biggest exposure to the marketing segment. So if they buy cheaper crude and sell petrol and diesel at the prices that they sell at, they will see the biggest benefit on the marketing side, and that's the reason that stock is at the day's high currently. We'll take a look at IOCL and BPCL as well to see how they are reacting to this particular brokerage note that has come by. Both of them at the day's high actually. So IOC up around 1% and BPCL as well will be on your radar as of now. But let's go across to Hormuz. He is here with the other movers that we have in the market. Hormuz, tell us more.
Well, the markets may be quiet, but there is a lot of stock-specific activity that is taking place and on very significant volumes as well. We'll take a look at HLE Glasscoat, and that is the stock at the top gainer on the Nifty BSE Small Cap Index today. There's an acquisition-related announcement that has come in, snapped a 3-day losing streak with this 18% move that you're seeing today, almost 19% now. Almost 33 lakh shares have already changed hands in the first couple of hours of trade compared to a 20-day average of just a lakh. And this is going to be the first positive annual return that the stock is likely to deliver after 3 years of negative returns. The other outperformer today is GE Power, and the stock was up around 3 to 4% yesterday. It's building onto those gains, 11.5% higher today as well. Almost over 20 lakh shares have changed hands today at a 20-day average of just 2 lakh shares. And courtesy of this 11% move today, the stock has turned positive on a year-to-date basis. And springing up in the list of gainers today is Ola Electric, and that 7% move is the third instance in the last 4 sessions that the stock has gained. We've already had 23 crore shares that have changed hands in the first couple of hours of trade today, and compared to a 20-day average of just under 3 crore shares. And it is exactly a year ago on the 20th of August 2024 that Ola Electric had hit a post-listing high of 157, and since then the stock is down 72% from those levels. And lastly, Motherson Sumi Wiring on our list today, the third straight day of gains. It was up yesterday as well, building on to those gains. Over a crore shares have changed hands today, a 20-day average of just around 20 lakh shares, and courtesy of this up move today of almost 8%, the stock has broken above its 50-day moving average on the charts and has also turned positive on a year-to-date basis.
Okay, thank you very much for that. Moving on then, inviting the first corporate on our show, the centre has proposed to cut GST rates from 28 to 18%. And if you fall in the 12% bracket, then it may come down to 5%. Now, the move is likely to spur demand for consumer durables like ACs and others. To understand the impact, the demand trends, we have with us B. Tyagarajan, MD at Blue Star, joining us on the show. Mr. Tyagarajan, always a pleasure to have you here with us on company, the industry. So first tell us, what is the GST rate that you pay on the finished good and even your various parts, the components that go into the making of the ACs in your products, and what is the expected change to your mind going to be?
Good morning. It's a pleasure interacting with you. Right now, for the room air conditioner and certain type of commercial air conditioning products, it is 28%. And the expectation is that it'll go down to 18%, which means a reduction of around 10%, and that is the expectation. And it's a great move. It will indeed spark demand, especially in a year when the summer had failed and there are stocks in the pipeline, and there is going to be an energy label change that is going to take place on 1st January 2026. We welcome this move that a 28 to 18% will help the industry in a big way.
Mr. Tyagarajan, you said that because of unseasonal rains as well this time around, demand was impacted for room air conditioners. So even if GST is cut, would it spur demand the way it is expected to? Because seasonal changes will mean that we won't require ACs the way we would require it in summers. First question on that. And secondly is, have you had word with the ministry? Do you think the proposal will actually go through because the states still have to approve this change?
Excellent questions. First thing is, whenever summer season fails, the festival season does well. We are talking about the comparison with the previous year. And we anticipate, even though the summer season sales did not take place, overall, I had stated that full year basis, FY26, 10 to 15% was possible. With the GST reduction, it can further grow. That is the expectation. Now, as far as the ministry is concerned, we are in touch. There are 2-3 problems here. First one is, this is the first time an announcement has been made, the GST rates will be rationalized, but the specific date has not been mentioned. There are quite a bit of processes that will have to be completed. So imagine if you are to buy an air conditioner, you will postpone it. So actually the sales are going to come to a standstill. The dealers will not lift the material. The consumers will wait and watch whether it is from 1st of September or 1st of October. And therefore, what is going to happen is August, September sales will be indeed impacted. One will have to go through that. So we are requesting the government that please expedite this decision. Otherwise, consumer durable sales will not be there at all during these months. Second part is connected with, you're right, 28% coming to 18%, whether it is a revenue neutral proposal. In the long run, it may be, but in a financial year, it may not compensate the states and they will have to arrive at what they want to do. And what we do not want is that 28 becoming 18 and some cess or something introduced in order to compensate, which will be counterproductive. We have to wait and watch.
Mr. Tyagarajan, firstly, thank you for joining in. And just to play the devil's advocate here and to take forward Sonal's point, the earlier generation was focused more on roti, kapda, makan as the basic necessities, but the generation of today has their priorities completely different. So whether if they want to purchase something, they would purchase it irrespective of the rate or the taxation or whatever. And if there is a saving that they have, they may be wanting to use it for other avenues. So do you believe that the issue surrounding the industry right now is a pure play demand issue and not just taxation? Or do you actually believe that this would actually lead to some sort of on-ground demand revival come the festive season? As you mentioned that the subsequent couple of months might be subdued sales because people would be in some wait and watch mode.
Decode this for you. The penetration levels in the air conditioners, the household penetration is in the order of around 8%, so it is bound to grow. Whatever happens, CAGR of 19% between 2025 and 2030 will take place. 1 year it may be a 50% growth, another year it may be 10% growth, another year it may be flat. But the room air conditioner market is destined to grow in the country. There is absolutely no problem. 40% of the sales are taking place through consumer finance, and 90% of the buyers are first-time buyers. And more than 65% sales are taking place in tier 3, 4, 5 towns. More than 80% of the products are entry-level products. Now you will get a picture that this is a category which has arrived and everyone would like to buy it, basically because the temperature conditions are going up and you are getting used to air conditioning in any environment you are in, car or cinema theater or office, so on and so forth. Now, power bills are also affordable thanks to the energy labeling scheme. And for 2 apps, whatever one will pay is the cost of electricity you will pay for using air conditioners for 6 to 7 hours a day. And therefore, I am not worried about the demand. Any benefit like this, income tax reduction or a GST cut, further spurs the demand, given the fact that India is a highly price-sensitive market. And industry requirement was earlier different. Industry wanted 5-star air conditioner or highly energy efficient air conditioners, GST rate should be brought down. But we are getting a bonus that all air conditioners, the rate will be brought down. So this transition is the one that we have to manage. You know, there are many moving parts. One, there is inventory pipeline in the system because summer failed. That is 30 to 45 days, more inventory is available. There is an energy label change that is going to take place on 1st of January. In the meanwhile, this announcement, which is remarkable, has come, but it should be expedited quickly for notification to happen.
Yeah. But Mr. Tyagarajan, since this is the big issue, right? Long-term things, it's a positive, but just in the immediate term, there is a risk of customers deferring their purchases because of this lack of clarity of the effective date. What is Blue Star planning to do? Have you thought of a plan B option to navigate if, things come to a standstill and slow down?
Very little one can do. The first one is, this is not a cost reduction taking place due to input costs, right? It is basically because you are charging a customer, you are collecting a GST, you are limiting it to the government. So the rate change, I won't be able to do anything. The full reduction will be passed on to the consumer, but unfortunately, the effective date is not known. All that we can do is to persuade or follow up with the government to ensure that these changes are effected as early as possible. Here, I cannot even tell the customer, you book now, I will deliver whenever it is required, because he will wait for. There is nothing that can be done. This is unprecedented. The announcement coming without stating a date. You know those days. There will be a union budget. That day, midnight onwards, it will be applicable. Or a GST council meets, that immediately it will come into effect. Here, there is an idea that is mooted, but already stock market or consumers have concluded this is going to be the rate. They will indeed wait.
That's right. Mr. Tyagarajan, that's the big point, right? It's a proposal. There's no clarity on the final date, and that is something which could actually impact demand rather than improving it till the time there is more clarity. So thank you so much for explaining that to us. And of course, we'll have a conversation again when these rates are finalized and what the ground reality really is like when you pass on those cuts in the GST rates, which are proposed as of now. Thank you so much for joining us today with your thoughts. That's the word coming in from Blue Star, but we'll slip into a break now. Up next, we'll focus on the crypto market with Mukesh Jindal from Alpha Capital.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Well, welcome back on Crypto Corner. Today we are joined by Mukesh Jindal from Alpha Capital. Mukesh, hi, thank you so much for joining in. I mean, this is like the new asset class that everybody seems to be talking about, and that is because it's given very strong returns in the last 12 months. from where we stand right now and the conversations around it, would you say that this asset class is not just charging ahead, but slowly getting into mainstream in any sense?
Absolutely, Manisha. In fact, last few years have been fantastic for Bitcoin. Bitcoin has gone up by 7 times in last 2 years, from $17,000 to $117,000. I think it's the newest asset class we have because it came only in January 2009. And your other asset classes like real estate, commodities have been there for thousands of years. Even stock market has been there for 200, 300 years. Lot of investors, in fact, majority of the investors perceive crypto to be a speculative or a scam kind of investment. But let me tell you, it has been in existence for now 16 years, which is a very long period. And globally, it has become very large. Your crypto market cap is now at $4 trillion, which is similar to the Indian economy. Bitcoin alone has a market cap of $2.3 trillion. On perspective, you can think that gold has a market cap of $23 trillion, so it's already at 10%. And now we have Bitcoin ETFs in US and other places. It came last year, and in just last 1.5 years, it has an AUM of $150 billion. It's the fastest growing and the largest ETF in such a short span of period. And $150 billion, just on a context, it's 13 lakh crores. So it's here to stay, and it's also attractive because, see, Manisha, in the last 15 years, out of last 15 years, 12 years, Bitcoin has been the top performer, and it has given per annum return of more than 80%. So fantastic asset class, which investors are considering.
Oh, well, absolutely. Those numbers are bang on, Mukesh. But people or investors are still slightly cautious with the kind of volatility that we see within the asset class. Would you say that seems to be maturing now? Because when you look at the last 2 or 3 years, we are looking at maturity also coming in under control. The credibility clearly has been on the rise. And as you said, the ETF money, the US also pushing with its regulations, friendly legislations has been a supportive factor. So would you say that if there was somebody who wanted to start investing in cryptos, what is the best way to do it? Is it trading? Is it long-term investment? Is it SIP? How would you advise to approach it?
So Manisha, you're right. The asset class, the Bitcoin, has become relatively stable in the last few years. The volatility has come down, majorly because internationally we have better regulations now, and we have institutional investors investing in Bitcoin through ETFs. Now, for retail investors or HNI investors, my suggestion will be that you need to be more aware about this. You need to spend enough time to learn about it. And my advice will be that you start small. And the best way is that you do a monthly systematic investment plan for next 10 years and forget it. Because as you said, Manisha, the crypto or the Bitcoin has high volatility. It becomes extremely difficult to buy cheap and sell high because it moves very fast. And when you are doing SIP, gradually you get an average out price. And if you do it for 10 years, you're reducing significant risk. What is also important, Manisha, investors should not allocate a large part of the portfolio in crypto. I think up to 5% of the portfolio allocation in crypto or Bitcoin should be fine. So I think if they follow these rules, they should be making money.
Also, would you say that it is about the blue chip cryptos that one should be looking at, because there are about 17,000 cryptocurrencies? India, of course, has much lower as in sense of in which you can invest really. But then again, it's a global market. I mean, it's 24/7 for that matter. But would you say it's the top 10, top 15 perhaps is what you should be looking at?
So in crypto market, you're right, Manisha, we have a lot of altcoins. Altcoins are beyond Bitcoin. And there's only one blue chip, Bitcoin. And that's the most stable, and it has majority of the market cap of more than 65%. And rest altcoins, though there are many, and there are places where you burn your hand, you burn your money. In fact, I myself have burned a lot of money in the altcoins. So one needs to be careful. And my suggestion will be that investors need to follow core and satellite portfolio with 80% of your corpus being in Bitcoin and 20% you can put in altcoins just for fun or to, try your luck.
All right. Would you say financial advisors are now looking at this in sense of advising, advocating it to their clients, especially when it comes to India? Because there is institutional buying, there is HNI, even big houses are starting to buy this as well.
So Manisha, there's a lot of interest from the investors, HNI investors, family offices, they want to buy. The challenge is the regulatory environment, because we know that RBI or SEBI is not a big time, in favor of crypto. So advisors are slightly skeptical. But the challenge on the other side is the new generation investors, the millennial investors, the next generation guys. They are showing a lot of interest in the crypto. So by default, advisors end up having this discussion. And I think it's high time that advisors equip themselves with enough knowledge to handle the queries of clients on crypto.
Oh, absolutely. Still a bit of a skepticism there, but it seems to be soon catching up with the kind of run-up that we've seen in various other countries coming in. Mukesh, as always, thank you so much for joining in and making sense of that price run-up and how should one really be investing in case of cryptocurrencies. Bitcoin, clearly, as you said, has come up from 17,000 to 117,000 in a matter of last 2 years. So many X of a return coming in on that one alone there. But with that, that's all the time that we have on Crypto Corner today. We strip into a break. We'll come back with more news and updates on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. The markets look to picking up some bit of momentum, and the Nifty now 50 points higher. 24,930 is where the index stands. Mitesh Thakkar joins in for a quick chart check. Mitesh, good morning. 25,000 still a barrier for the Nifty. What's your call here now after the move that we saw yesterday and a bit of it today, and your stock calls as well for the morning?
Yeah. So my view, I think, is slightly positive. Very clearly, the big move which happened on Monday, which is yesterday, has changed the direction on the upside. In fact, I was indicating that on Thursday as well, that the hourly and 2 hourly indicators have started moving up from oversold levels. So good chance of a bounce back taking place. Now, the first targets were around 24,950, 25,000. They were met. And now I've revised them to about 25,250, 300 on the upside. So I think we're heading towards those levels. And as long as we are about 24,800, 840 zones, any declines or pullbacks to those levels would be a buying opportunity. So very positive over there. On the stock side, Aditya Birla Fashion, that's a buy with a stop at about 76. Look for targets of around 81, 82 to begin with, maybe more. And the other stock which I like, that's Jindal Steel and Power. That's a stock, which has been consolidating and not breaking beyond 1,010. So I would keep a trigger, buy about 1,010, 12, keep a stop at about 995 and look for targets of 1,045 once the breakout takes place.
Okay, all right. Thank you, Mitesh, for joining us. So that is a technical take on the markets. But let's talk about all the trends from the F&O space. Sudarshan is joining us now with just that. Sudarshan.
So Nifty is higher largely on the back of the gain that we are seeing at Reliance Industries because it's the biggest contributor to Nifty. But the good part is that big gain is coming in the mid-cap index that is keeping market breadth in favor of advances. There is not much indication. If you look at the PCR data, it's almost the same level that it was yesterday. Even volatility index, it has slipped below 12 and it's currently down almost 3%. But the interesting data is coming from the options front. That straddle play, it's like if you look at 24th and 900, both side, call side and put side, it's the day of writers. So premium is down for both these 24th and 900 call and 24th and 900 put options. So now downside becomes very important level, that is 24,753. So at this point, it looks very difficult for Nifty to slip below that level, and that is also technical wise. If you look at it, it's 20-day moving average. And on the upside, immediate resistance would be around 25,020. That is the 50-day moving average. If we manage to cross that comfortably, next resistance level comes around 25,250. That is the recent high. Two stocks that I have taken. One is Inox Wind, that is seeing fresh longs, and on the short side, that is Nuvama, which is seeing fresh shorts.
Inox Wind seeing fresh long positions. Darshan, thank you for that update there. We'll take a short break. On the other side, continue our conversation on the markets with Devang Mehta of Spark Private Wealth Management. Stay tuned. Welcome back. 24,940 now on the index. So a 10-point move over the last couple of minutes that you've seen on the Nifty. But a day that has been dominated by auto stocks yesterday. They're building on to those gains today as well. And that is the big story of the day on the show today. The second straight day of gains for all of these auto stocks. Sudarshan is here to tell us what exactly is driving this move in these auto names. Sudarshan.
So it's another day of big gain that we are seeing in the auto sector. And yesterday, if it was about GST rejig, today it's a different topic. Now, what sources indicate that Indian foreign minister had a meeting with Chinese foreign minister, and in that meeting, Indian foreign minister has raised few issues, and in that it also includes rare earth magnet supply. And now sources indicate that there is a confirmation from China's side that they will look into the issue related to rare earth magnet supply shortage that sector auto companies have been talking for the last few months. And when they had indicated that if this supply issue persists, they might have to go for production cut. But now with this news, we are seeing a big move not only in the major auto companies, but also auto ancillaries. So this is the news. On the back of this, we are seeing a big gain.
Okay, so Sudarshan, which would the players be which are expected to benefit if rare earth magnet curbs are lifted?
So normally it's the biggest beneficiaries are the companies which have major exposure to electric vehicles, and those companies are like, if you take a look at the incumbent players, Tata Motors has the biggest exposure in the form of JLR. Second, Ola Electric is there. Even Mahindra and Mahindra, after the launch of 2 BEVs, even they have the huge exposure. Apart from this, the companies which are having the hybrid vehicles, and in that list, Maruti comes on the top, because if you talk about the Indian company, it's one company which has the biggest exposure in the hybrid segment. Apart from the main auto companies, it would benefit auto ancillary company as well, like Endurance Technology, Motherson and Bosch India, because they also supply auto parts in which they do require rare earth magnets. So overall, it would be positive not only for major auto companies, but in the entire auto pack, which will include auto ancillaries as well.
Okay, just one quick word. Everyone's looking ahead to the festive season and whether that's going to bring good news for automakers. I mean, looking ahead, what are we watching from the auto sector?
You know, yesterday I was talking to Ashok Leyland management, and after GST rejig, one big point that he has mentioned is there are chances that outlook for the sector can be increased further if GST rejig and also RBI action that he has indicated. So if these two actions materialize, there are chances that CV outlook that currently industry has of mid-single digit, it can be increased further. Even PV outlook can be increased because of the demand can improve if GST cut comes. Also, RBI action will lead to overall increase in the demand. So apart from this GST rejig, RBI action, normally ahead of the festive season, demand improves, and amongst the biggest beneficiaries if the demand improves ahead of the festive season would be the companies having huge exposure in the entry-level segment. So that's the reason over the last few days you would be seeing big move in companies like Hero MotoCorp and Maruti Suzuki. But overall, whatever the news flows we are getting over the last few days, it's positive for the entire sector.
Oh, positive for the sector indeed, as the Nifty Auto Index now 4th day of gains out of the last 5 trading sessions. So Sudarshan, thank you for summarizing this move that we are seeing in this auto sector. That's our big story of the day, and that's the first question we also ask Devang Mehta from Spark Private Wealth Management, who is joining us now. Devang, good morning. Thank you for joining in. It's been the sector that has been in the spotlight now, Devang, this auto sector. First with regards to this potential GST cuts, now with regards to this potential lifting of curbs on the rare earth magnet exports as well. Do you see that all of these steps that have been taken in the last couple of months, even with regards to the income tax cuts for that matter, provide a boost to the sector ahead of this upcoming festive season?
Morning. Thanks for having me on the show. Always a pleasure to be on CNBC-TV18. Yes, ideally, whatever news flow we are seeing in the last couple of days, let alone be GST, but be it the progress of the monsoon, be it the rural India coming out of stress because of one monsoon, second of demand situation improving a little bit. I think whatever sectors are coming back to the fore are sectors which primarily did extremely well from 2003 to around say 2021-22. Post that, I think 2-3 years of strong headwinds for the auto sector, where those selective companies came out and delivered good numbers and came up with aggressive, great models which found favor in the market. I think the trend has completely changed, right? People used to buy hatchbacks, and now I think the elite Indian consumer, aspiring Indian consumer, is now buying more SUVs. My sense that a combination of good urban consumption, good rural India coming back to the fore. I think people are wanting to find substitutes for sort of discretionary consumption, and what better than auto, right? So India still today has per capita in terms of auto super less penetration than what we talk about the developed economies or certain developing nations. So my sense that this icing on the cake which government has tried and provided, if this comes through in the next 1 or 2 months, I think this will augur extremely positive. Macro conditions are positive. RBI has been on a rate cut spree. There is liquidity across the company's balance sheets are, I think, quite powerful right now. And with the launch of new models with all these companies, I think there is a revolution which is also going to come into EV. So my sense, this sector probably will be beneficiary. Don't look at the short-term repercussions that the stocks have bounced back. But I think this probably seems to be getting into a structural next couple of years. Really, that's what seems right now.
Devang, hi. What would your call be on consumer durable companies? We were just chatting with Blue Star and we were discussing, about this GST rationalization. If the GST rate on room air conditioners comes down from 28 to 18%. While it's good news on paper, the cost comes down for consumers. In the interim, because there is lack of clarity on the effective date, customers might choose to defer their sales. And therefore, if we don't get clarity, then there is a possibility the whole festive season on which the demand rests could be a washout. And there's not much companies like Blue Star can do. I mean, how are you thinking about this issue for consumer durable companies?
Yeah, Rima, very well said, and that is a distinct possibility which can happen, that probably people defer their demand. But what I see for the Indian consumer right now is that I think there has been a lot of pent-up demand for this type of goods over the last 3-4 years, and quarter-over-quarter, generally we have seen a decent set of numbers coming from this type of companies. But yes, that's very well said. If the clarity does not emerge soon, probably there will be a couple of months of a dull run. But again, market is a discounting mechanism, and the stock prices would sort of not correct big time, because markets know that if people defer their demand, and this cut even comes through probably in the last week of September, or probably even in October, I think then there will be a lot of pent-up demand which the companies would sort of benefit from. Yes, but at the expense of saying that this quarter can be a bit of a drag if clarity does not emerge soon, that can happen. But I think market will take it with a pinch of salt.
Okay, yes, that's exactly the point, because it's still proposed and there's no specific date that has come by as well. Devang, what's your take on oil marketing companies? They have been surging. There's a note suggesting that Russian crude oil purchases would continue, and that's something which would aid their margins. Do you think the triggers for these companies is already priced in, or there's still more room for improvement from here on?
So that ideally, yes, probably there can be some more headroom here. I think what one crude has cooled down around 66, 67 Brent as we talk. Yes, India probably is still on a super wicket in buying oil from Russia. That's also played out very well. Having said that, these are more thematic or more tactical plays that one should engage into, because if somebody takes a structural conviction call, that is going to be difficult on OMCs, as there is always a crude price pressure that comes onto it. There is always a government compulsion or a regulatory thing which comes in and sort of deters the sector. So as I said, it will be more tactical in nature for the portfolios, but there are n number of great themes available right now, domestic centric themes. Consumption has again come back to the fore. There is capex. There are capex companies which have come up with good set of numbers, be on execution, be on order book. I think I'll probably set my sight in lot to do with consumption, capex, and a bit of financialization candidates rather than being into OMCs for a long-term play. Yes, as I said, it can be more tactical.
Devang, correct me if I'm wrong, but another sector which is difficult to make a structural conviction call is metals, right? Because there are so many moving parts to this sector. What's your call here? And is there or are there sectors where you are betting on as of now, considering the changes that you have seen taking place over the last 1 month?
Yes, so I think we've been very vocal saying that anywhere where there are global linkages can be more tactical, can be sort of more a type of, I'll not use the word trading, but it will not be sort of an investment thesis which one could lay down over there. So in that parlance, yes, we generally have been avoiding something like IT since long. I know that probably the valuations are now probably at a level where a lot of people would buy it, but we are still, as I said, avoiding things which have global linkages. Coming back to the sectors that which we are probably showing strength and we are quite confident on. We feel that typically micro sectors in India, a lot of sectors, I'm not talking micro caps, but a lot of sectors which are probably proxy plays, the first mile proxy play, be it for semiconductors, be it for engineering, be it for manufacturing, be it for stamping, lamination, power automation, cryogenic equipment, port infrastructure. These are companies which probably, if the consumption universe also starts showing strength, there will be a lot of manufacturing which would be done. There are a lot of linkages internally also. So financialization candidates like depositories, like some AMCs, financial intermediaries. These are companies where I think you can lay a lot of strong foundation. All these companies typically would probably have the top line growth anywhere between 12-15% and bottom line say anywhere between 18-22%. So my sense, more domestic centric candidates, oriented, capex oriented companies, consumption we are trying to find out. Yes, the view does not change, but we would love to add certain consumption names in the portfolio. If there are not, we have some consumption names, of course, but we are on the lookout for more consumption type of candidates as the things seem to probably change also on the demand front and also on the GST front.
Okay, all right. Thank you so much for joining us, Devang. So that's a market conversation. But it's time for a short break now. We get you an update on the Mumbai rains on the other side.
Welcome back. The other big story outside of markets is heavy rains, which continue to torment Mumbai. Torrential rains have led to heavy waterlogging, transport disruption, flight delays. The IMD has issued a red alert for the city with a forecast of heavy to very heavy rainfall at a few places. Sandhya now joins us with a ground report.
Heavy rainfall in Mumbai and nearby areas continues on Tuesday morning. The situation has become worse because of the combination of heavy rainfall along with a high tide of over 3.5 meters. Right now we are in Mumbai's BKC area, and what you can see in front of the camera is the Meethi River. So this is how bad the situation is. BMC Commissioner told CNBC-TV18 that the danger mark for Meethi River, the danger water level is 4 meters, and at present the water level of Meethi River has crossed 3.10 meters. So that's the situation. Keeping this in mind, BMC has started evacuating the nearby slum areas. People who are not from Mumbai, viewers who are not from Mumbai, there are multiple slum establishments on the banks of Meethi River, and that's why those people are vulnerable, those establishments are vulnerable. Keeping that in mind, the evacuation work has started. Total 5 NDRF teams are deployed in Mumbai alone. Keeping the extreme situation in mind, BMC has declared a holiday for government and semi-government offices, barring those who are a part of essential services, emergency services. Other than this, BMC has made an appeal to all the private organizations as well to give a work from home or a holiday to their employees depending on the nature of their work. As of now, this is the situation of Meethi River. A holiday has been declared for all the schools and colleges, not just in Mumbai, but also in Palghar, Thane, Raigad, Ratnagiri and Sindhudurg areas. IMD has issued a red alert for Mumbai, MMR region and North Konkan belt for the entire day, for the next 24 hours. Keeping the extreme situation in mind, BMC Commissioner has assured CNBC-TV18 that the entire BMC machinery is on the field to ensure that Mumbaikars don't face inconvenience. Talking about the commute, massive traffic jam on Western Express Highway continues. Local trains on Central Railway are running with a delay of 10 minutes, and local trains on Harbour Line are running at a delay of over 5 minutes.
Santya, thank you for that update. And in fact, Santya shared another very important update just a few minutes earlier that the local train services between on the central line between Sion and Kurla have been suspended, and the harbour line train services up to Mankhurd have been suspended. So important updates coming in on the central line and the harbour line as well because of this torrential rainfall that is currently lashing the city of Mumbai. We'll get you more updates on the other side with regards to the rain and the markets. Take a short break. We'll be right back.
Welcome back. 80-point uptick on the Nifty, and it's led by some recovery we are seeing in the Bank Nifty as well. So the likes of Kotak Mahindra Bank, IndusInd Bank, all of them at the day's high. Reliance too is supporting the gains that we are seeing. Mid caps outperforming, so are the small caps. So with that, we'll take your leave on this edition of Trading Hour. But stay tuned. Halftime report is up next. Takes all the action ahead.